here again with Tyler Webb with American Pacific Mortgage. Like I told you last time, I was going to pull him in with me so we could talk about appraisal and loan contingency. Now, we just talked about inspection contingency, which there's a whole slew of things that fall under that umbrella. But appraisal contingency, we didn't get a chance to talk about appraisals yet, so you obviously are the one that gets to order that fun little piece of paper that the bank wants, right?
That we do. So the appraisal is a very important part of the process because it basically lets the lender know that what they're lending on is sufficient. They're not going to be lending $500,000 for something that's really worth $450,000. It's fair market value, and it also makes sure that the home is meeting safety regulations and procedures. That way someone's not buying something that could end up causing issues to their health and safety later on.
Very good. So then it takes approximately how long to get an appraisal back nowadays?
You know, right now I would say it can take a little bit. It can take maybe a week. I've seen some go out a little bit longer. Depends on the complexity of the property, where it is, that kind of thing. But typically I would say a week, week and a half, sometimes 2 weeks.
Okay, so which we do make sure that we know what the current environment is, and putting together your offer to make sure that we allow ample time to get that back.
Right.
So that way we can review it, because then once we do that, that's when we can possibly remove that contingency. If it comes back at value, or even better, if it comes over and you have instant equity, we have a little party, right?
Exactly.
And then if it does come in below, well, then we might need to renegotiate with the other party. And once we come to an agreement, then that's when that contingency can go. And we say, okay, we're good with this part. This isn't going to be a reason for us to cancel. The last one that we usually have to deal with is the loan contingency, right? So, and he's the one that I'm going to be calling to say, okay, are we good? Can we remove this? Because I don't want to be putting, our client's money at jeopardy until we know that we're going to be able to close the deal, right?
Of course. And we definitely don't want to put anything at risk. That's why these contingencies are there, as protections for the client when they're buying the home. The loan contingency specifically, typically after we get the initial loan approval, that's when we can get a good gauge of whether or not we're in a position to remove that contingency. In an ideal world, we would want it clear to close, but rarely things are following those ideal conditions. So as long as we have a good, clean, conditional approval that we know there's not going to be any issues with the loan, that's when we can say we'll remove those loan contingencies.
All right, yep, that's it. And once we remove those contingencies, we pretty much know we're in the final stretch, and
exactly,
we're going to be handing over keys before we know it, right?
Exactly.
So they always roll out the red carpet for you to sign your loan docs, and then I do when I meet you at the home. So we're going to take great care of you through the process, and we'll see you next time.
Have a good one.